What is up, traders? Welcome to Trading Topic Tuesday. It is September 28th, and we've been, what is this, week 18 right now? Trading Topic Tuesday?
Yes, week 18, week 18. Yeah.
Woo! Bringing to you,
Wow,
man.
time
Bringing to you.
flies.
Yes. And just to recap, like we've gone over a bunch of stuff: foundations of trading, where to sign up for your brokers, trading psychology. We did a mini series on that, and overall, it's just to help you as a growing trader to just get better little by little, right? And so that's what we're doing. We're producing these awesome content. It's free. Tell your friends, tell your mom, it's free, okay? And um, it will ultimately lead you to being profitable in the markets consistently. That is the goal. So tonight is going to be focusing on exiting the trade. Exiting the trade. It's going to be like people think it's just going to be it's so simple, but it's not so simple, right? It's not so simple. Um, Definitely. You want to add anything before we start off, Reed?
No, I'm looking forward to this one. This one, not many people think about it. I like this first quote we start off with, Glenn, man. I'll kick it off with this quote right here. So our topic is exiting your trades. This then quote goes like this. Oh, next one, next one.
Bang.
Anyone can get in the market. Exiting is where profit is solidified. You will either close your trade with a profit or with a loss. And that kind of sets the tone of everything. It's so easy to get in the market, but getting out is a different animal. So
Different
with
animal.
that, like Glenn, I hand it over to you, my man.
Bruh, totally. You just reminded me. Like, I would read a lot of trading books, and there would be these professionals talking about. They would reach the end of their career, and they're chatting with other traders, and there was this one question, one guy, one trader, I don't know who it was, but he asked them like, "Hey, if you could just improve that like one thing over your career, what would that be?" In trading particularly. And he said, "You know what? I haven't mastered exiting the trade or exiting the market."
How long has that guy been a
At least
trader?
20 years, man. He's a baller. He made
Wow.
his millions. He's a baller.
Yeah.
I gotta go and figure out which book it's from so we can actually read it. But that's what I remember. And when I was listening to it, it didn't really hit because I was kind of early in my trading career. But now that I think of it, I'm like, dang, man, that just that one line, that's so deep. Like, and
It's come full circle.
it goes far because if you exit wrong, that's you could be losing millions on the table, right? Or leaving
Yeah.
millions on the table, and so that's going to be the difference between average year and a killer just knock it out the ballpark year, right?
Yeah.
Knowing where to exit, knowing it, just based on this quote right here, exiting is where the profit is solidified.
Yep.
Love it. There's more to there's more to it than just exiting. Exiting for a loss does affect, or win or loss does affect your P&L, which is your profit and losses. And that's where a lot of people their thinking stops there, right? All they want to know is just tell me where to get out so I can make the most money. I wish it worked like that, right? Tell me where to buy on the bottom, the very bottom. I want to buy the very bottom, and then I'm gonna exit at the very top of the market.
Yeah.
So let's handle that idea or that expectation right there. We're gonna pause you right there because simply that just doesn't happen, right? You never exit at the very top or the very enter at the very bottom, all right?
Because we
So
don't know.
we don't know.
We don't know.
Nobody
No
knows.
one knows when the top is, and the buy low, sell high mentality is just, it's not an actual plan, everyone. It's a fun thing to say, but it's not an actual plan. No one knows the lowest lows. No one knows the highest high.
Yeah, that is right. Set that expectation. So we're setting it early. So the other, besides your trading capital, your money, right? Exiting does affect your mindset. We are all human, although the ultimate goal is to feel neutral. It's not as easy overcoming a tough loss or feeling great after your biggest win. It feels good exiting a trade with a profit, while it feels twice as worse getting your stop loss hit. And so we put a little note down there. The key is to not trade off your emotions. When you're finishing your trade, you exit it, whatever it may be, win or lose. If you really think about it, or really do it like a little self assessment, do a self test when you're making your next trade, and notice what's going through your mind when you click that button to go exit, or if you just automatically get stopped out. What's going through your mind? Is it, damn, I should have, or if only, ah, and even when you hit a win, right? Oh, we should have put in more. I
Yeah,
should have
yeah,
doubled my trade, right?
yeah.
So right there, pause you right there again. You know, those thoughts are taking you way off track and setting unrealistic expectations, and it could be distracting, and it could just make you even feel worse. You go and win a trade, but it's not a home run. And then you almost like sometimes I did this before. I'm like, why did I not add any more positions, or how come I traded so small? Little, even though that small win, that's probably what the best thing that could have happened. Why? Because you built your confidence, right? You
Absolutely.
started some momentum, and so it's more. There's more to it than just exiting. So we talk about the a few ways to exit the market. You want to go over this?
Yeah, sure. Yeah. So there are a few ways that we can exit a market with a technical aspect. So it's manual close or market close. You're closing at exactly, you're clicking your fingers, clicking that mouse or app, and you're closing that position at market level. You're using an indicators. Maybe you're using a trailing. So indicators or trailing stop. Maybe you set the stop at a specific EMA level or price level, that, or a support resistance line could be an indicator as well. And you're taking that profit. Maybe you don't select a profit, but you just have a trailing stop. And so as the market moves up, the trailing stop follows the market movement. And as soon as it spikes back down, you're taken out of the trade. That kind of eliminates emotion. So that could be beneficial for some traders. An initial stop loss is you don't move your stop loss. You just let that initial stop go. And then depending on your risk management style or strategy, you move that basic stop loss up to certain levels. There's take profit, which is kind of like, using indicators. Kind of mentioned it earlier. Take profit, you set that specific level to take that profit, a certain price of that commodity or position, that instrument that you're trading. Scaling out of position. So let's say you have one position, you could end up taking maybe half that position out or a third of that position out. Maybe you had four positions. Maybe you closed two positions. That's what we mean by scaling out. Meet margin requirements. Meet margin requirements is a no-no, right? Are we talking about like margin
Yeah,
calls?
margin
Yeah. So
call.
margin calls, if you're unfamiliar with margin calls, it's every trader's that starts off has usually been here because we're kind of testing the waters, learning how to trade. It means basically you're over risking, and that's what's happening. Or the trade has run way, way too red, and the brokerage, if it's a real account, will give you what's called a margin call. You get it in email, you get it in notifications. You'll know if you've been in a margin call. It'll say, please add more funds, or please, your position will be closed if more funds aren't added, along those lines.
Yeah.
And finally, the last one is another trade opportunity shows itself. So this is tying into greed, where let's say you have a really solid position running, and then you want to jump in the trade that you just saw move, and it's not correlated at all. You're like, oh, I've been watching this specific trade all month, and it's finally moving. So I'm going to close my good position that's running in profit, that's solid, and now I want to get into this new opportunity. But it could also be the vice versa. Maybe you're in a trade and it didn't reach any of your initial stop losses, and so you just take it out of fear, like of it actually hitting that specific level, and because you're looking at another opportunity. So that's just at the end, the trade should be there should be no emotion. Tomorrow's a new day, win or lose, and there's always going to be more opportunities and we mean that in a good sense, not closing positions out early or out of fear or out of greed because there's new opportunities, but knowing that whatever the result of this current trade is, this current position, that new opportunities will present itself.
Yeah. Just
Anything
to
else to
add
add, Glenn? What do you think?
to
Yeah.
add to that one, man. At the last one, if another opportunity shows itself, I would find myself struggling with that sometimes. Well, prior, um, but and like sometimes you'll get carried away. You're like, oh, I see a new setup. I'm in a trade. Okay, do I just ditch the current one? I want to get into this one. You start getting excited for the new trade, and then you screw up your original plan. And so, but at the same time, if that next trade works out, it works out. So like as a beginner, like what would you recommend
I would
to?
say you're setting up yourself for failure if you are looking for that opportunity and you're not following your plan. Like that's the baseline. Like, are you following your plan? Because that plan is gonna come in clutch during those drawdowns, during those rough months. You're like, okay, I know my plan works. I'm gonna continue to follow my plan. And then when it does work, you're like, yeah, my plan's the shit. Like, but then like that's where we'll talk about, like, that's fear, that's greed, like teeter tottering. So I would say, like, overall, if a new trader is doing that and it's like, oh, but there's a new opportunity, the the question is like, is this following your plan, your original plan? What would
I
you
like
say?
that. Wise words, man. I like that. I like that. But yeah, I would totally agree. It's just sticking to the original plan. Let the trade play out, right? Just let it totally play out, whether it be a win or lose. Let it play out. Don't force it too much. Like we talked about last week. Don't force your trade.
Yeah.
Um, but yeah, let it play out, and then that way you're gathering stats for yourself, gathering stats for your system, and then that's the thing you're gonna have to go and work on, improve, refine, right? And what came to mind just now with this whole finding another opportunity to trade. It's like shiny object syndrome, yeah.
Yeah.
Oh, new setup, new
Yeah.
setup. Now,
Yeah.
yes, the main goal is risk management. If you have a certain amount of capital, you have to trade according to your capital. For me, that's what I found that really just drew the line, right? It drew the line. It's like, okay, I got X amount of trades already running. I see this new setup. I look at my capital. I'm like, okay, I can't handle that next one. I'm just gonna leave it. It is what it is,
Walk
right?
away.
Unless you make that decision to close out one of your other trades, that's totally fine. But as long as you know you're gonna make that consistent decision every time, right, going forward, because what you're trying to do is build a system. You want to build a um, just mechanism to just keep it going, right? And so if you're gonna go and decide, like, if you set a rule like, oh, I'm just gonna close on my oldest trade so I can jump on into this new one, whatever, that's fine, dude. That's fine as long as
Yeah.
you do it all the time.
I like what you said about, if you're going to do this now, make sure you're doing it in the future, because that's what Mark Douglas really preaches about: consistency. A lot of people think like, oh, I got to get consistent profit or to be a consistent trader. His whole message is regarding consistency is consistency to your plan. You need to follow your plan, do the exact same thing over and over and over again. If you know you have an edge, keep trading your edge
Yeah.
over and over. That's the consistency he's referring to. A lot of people get that little mixed up. Like, oh, I need consistency as far as profit goes.
100%.
Uh,
100%. So your trading plan should be logical and will keep your emotions in check, right? Your trading plan itself, when you're writing creating a plan, there's no emotions attached to it. It's pretty much step 1, step 2, step 3, step 4. Same thing with submitting the orders, right? It's all you're just clicking a button. You know when you go, well, that's a bad idea. I was gonna say when you go to the drive-through, make your order. I mean, we get emotional though because we have. But you
like,
know,
oh,
you're
can I add
creating.
this? Can I add that? Oh, wait, one more.
Yes, trading. I mean, you're creating an order, and you're just creating an order ticket for you to exit out, right? In this case that we're talking about. But I
Yeah,
think
yeah.
just to wrap it up, like no matter what we're doing, when we're creating orders, our minds is the thing that adds all of the emotions, the stress, the anxiety during opening or closing of trades. And if you're feeling anything other than confident, take a step back to get into the zone. Right? Take a few deep breaths, do some little woosahs, do some push-ups if you're feeling too anxious. I don't know, jumping
Yeah.
jacks. Go eat,
Yeah.
go eat your favorite comfort food. Maybe not.
Get out in nature.
Get out of nature. Yeah,
Yeah.
yeah. Just step away, right? Pause,
Yeah.
and it's because yeah, at the end of the day, like we got to be logical. We got to make the best sound decision. And as a trader, it's so hard because we're humans and we almost have to detach that human element.
Yeah.
Almost.
Yeah, it's not easy,
It's not
but
easy.
I think that's the challenge. If it was easy, everyone would be a trader.
Mm-hmm. Mm-hmm.
Like, yeah, I like that. Just going off of like the stress and anxiety, dude. The market doesn't do anything. Like, and exactly what you said, it's our mind's interpretation of the market. The market's not saying or doing anything. It's just natural movements.
Oh yeah.
So I mean,
Oh yeah. It's just
we add
numbers,
that.
man. It's
We yeah,
numbers.
we add that weight.
100%. You should know where you are going to exit before getting into a trade. So like, trading 101. You got to take this. There's some wise words here. It's been repeated. You should already know where to exit. I mean, you hear it over and over in different topics, right? Business and stuff, real estate, right? You make your money when you buy your deal, right? And so a lot of people know when they're gonna exit. So same thing when you're formulating a trading plan, a trading approach, you should know where to enter, and you should know where to exit, whether it be a stop or whether if it's a trailing stop or if you don't have target profits, that's fine. But if you know that okay, if market moves X amount, then my stop will move X amount. That's it. Just be protected, right? And then some things to monitor is if you're already anxious, you're not in a clear state of mind. The emotion won't end until you exit the trade. So like the FOMO, right? With the GameStop earlier this year, people were going nuts on the memes,
Yeah.
and the social media did not help. Like it got the
No.
word out. The word got spread out fast, like wildfire. But it
Yeah.
was frenzy, hectic. If you were to just describe the market action, dude, like wouldn't you? It would not be calm, right? GameStop.
No. Skyrocketing, going
People.
panic, going down, then going up like real fast. I mean, shit. I even bought into GameStop. I bought like two stocks,
Yeah,
and I mean, one small win and one was a regular loss, but like it was all emotionally based. Like I wanted to be part of some type of cool movement, but
that was your
like
reason.
that's exactly what you don't do. Like I own up to it.
I dig it. I dig it. But you knew what you were getting into. You
Yeah,
didn't
yeah. I
go.
knew the risk. I
Yeah.
was fully. I did it with a smile, I should say, not with the
Okay.
anxious heartbeat. So
Uh, I get that. You were aware, so that's the main thing,
yeah,
right?
yeah.
And then same thing
That's a
with the
key point.
GameStop, panic exiting, lots of emotion in there, lots of crowd excitement. Um, you got to be. paying attention if you are exiting calmly. If is it a discretionary exit? Is it a according to your plan? Right? Got to know the difference. And the last point, it's easy to enter the market, but exiting is when the profits are secured. Going back to our beginning, how we started this thing off. As you can see, we progressed. Like submitting an order is just plain simple. It should be step 1, 2, 3. But what gets in the way of submitting the correct orders at the correct times or executing them is our minds. That's it. So we're kind of just drilling that in tonight, drilling that in. It should be easy to enter. It should be easy to exit. Question that came up while we were putting this together, right? If someone who's starting out, they would just ask, how do I know when to exit? That is a question. Do I exit at the very top? Do I exit when I'm tripled my money? Do I exit when Twitter tells me to? Or stock twits? Oh, Elon. Do I wait for Elon to drop it?
Yeah.
You know, that is a question everybody wants to know. Well, I think the deeper question is, where can I make the most profit exiting?
True. Yeah. I think
Right?
that's a lot on people's mind is like, where do I get the most money off of
That,
this trade?
there it is. There it is. And a lot of
What would
people.
you, what's the underlying issue there?
It goes back to your intention of getting into the trade, right? I gotta go question how you got in. And like, oh, my friend just told me to. Did
True.
I?
Yeah.
True story. I told my friend I knew he was just starting out, and he didn't know anything, and he told me, oh yeah, I have a either Robinhood, Webull, whatever account, and I got some stocks. And I told him, I looked at him, kind of brutal, but in a loving way, I told him, just close your account. Just close.
Save your money, save your hassle, save the emotion.
And so I think he did follow my rules. I mean, my advice, because I don't hear or see anything from him. But who knows? Like, if
You could have lost it all,
I
bro.
woulda, I think I saved him a good amount of money.
That's
Uh,
good. Yeah.
but yeah, it goes back to your plan, right? What does your trading plan say, right? Having that expectation, knowing how to approach the market. Like the market is uncertain. No one knows where it's going. But the thing is, what you gotta have is your certainty, right? In your self, certainty in your decision making, your plan, your approach, your edge, the edge. So you gotta. That'll be the answer to the question of like, how do I know when to exit, dude? What does your plan say?
What is your plan? That's a good answer.
Yeah. So things to be aware of: impulsive trading after exiting trades. I am guilty of that. Are you prematurely entering a trade without a proper signal? I'm guilty of that. I've done that too.
Me too, man. Me
Yes.
too. We've made all the mistakes in the book.
So to close this off, you want to just sum up your exits, and you just think about it. Your exit should result in 4 ways: a small loss, small win, big win, or break even. And you gotta look. You know, if you're looking at this, you're like, and people just look at it, and you might be like, okay, something else is missing. Yeah, the thing is, big losses is missing. You should not have that. You need to avoid that. If you can just avoid big losses when you're starting out in your trading career, you should be okay.
You set yourself up for a lot of success when you limit your losses. You will lose more than you win. People need to understand that. Especially when you're starting off. Maybe like over the years, you get a 60 to 70% strike rate. Who knows, depending on your plan. But you're gonna get losses and a string of them too.
Oh yeah, that is a good point. A string of losses, right? Would
That's
you
a
rather
given.
have a string of small losses or a string of big losses. Yeah,
Very valid point.
that's it. Look at it that way. And the perspective is to treat trading like a business, right? You want big expenses, small expenses. You starting out a company, you're gonna hire a
Yeah.
big time CFO and a COO, paying them millions. You didn't sell anything yet.
Yeah.
Yeah. So that's how you gotta think about it. And hopefully this guide or the content tonight helped you guys put everything in perspective on how important it is to exit correctly a trade. Exit correctly.
Yeah. So it all comes down to the plan.
Plan.
I like it,
Plan.
man.
Set the right expectation. Control your emotions, your decision making. Keep a clear head. And then follow. Be disciplined. It's trading in a nutshell.
Wow, that's so easy, man. That is so easy. That's it.
That's it. That's
That's
it.
all I gotta do.
Dude, tell you.
Oh man,
That's sick.
trading's
Yep.
easy then.
Yeah, I got this. I got this.
Yeah.
But yeah, as we wind down that conversation, guys, really take a screenshot. If you got to replay this, definitely do so. We're just drilling it in. We are the biggest obstacle from our successful trading career. It's us.
It's you.
It's you.
Your
That's it.
brain.
Between the ears.
Yeah,
So
between the ears.
we're helping you guys build a solid foundation, the right expectations, and laying out some sort of pathway to follow. Because great trading can be repeatable.
Ooh, yeah.
Yes,
Amen.
yes. So, we close it out, guys. I mean, thanks again for watching it. Hope to see you guys in the group. Keep asking us questions, and also DM us what kind of content or topics you want us to be talking about.
Yeah.
Definitely. Yeah, we'll put that to the list and build some awesome content behind it. So.
Yeah. Thanks for tuning in, guys. Thanks for